Are you ready to sell your crypto before the year ends? Hold up, baby. Don't hit that sell button just yet. Everyone's calling for the peak coming in just a few weeks. What if this cycle is going to be a bit surprising? Well, we've got 9 compelling reasons why this bull run still has a lot of legs, and number 9 is going to blow your mind, so make sure to watch till the end before you decide. Now, our first point might sting a bit, but let's be honest. Why do Bitcoin and crypto pump them past? Some people will tell you because Bitcoin is the future of all money. Fiat is dying, and it's kind of true. But the real truth is speculation and hype. Come on. You guys know what kind of market we're in here. After Bitcoin, every new chain popped up. People piled in, not because they were solving world hunger or making everything a good place for puppies, but because they thought it might moon and make them shit tons of money. Back then, we called it hype. Now we call it narrative, baby. Narrative. However, there's a big difference this cycle. While some crypto projects are still out there running mostly on speculation, many are actually starting to generate real revenue. For example, decentralized applications are now earning money instead of just relying on pure pump. That money is now being used to buy back their tokens and burn them, creating continual bid. Data from Syndica shows that aggregate Web3 dApp revenue hit a 6-month high in July, reaching $468 million, up 139% year over year. That's a clear signal of renewed on-chain activity. Leading the charge was Solana with $209 million in revenue, up 25% month over month and 139% year over year, giving a dominant 42% market share of all dApp revenue. With things like Pump Fun buying back their tokens and burning them, it's impactful. Now, if you think DeFi is still too niche, then it cannot get more pedestrian than Robinhood, which pulled in almost $1 billion in revenue. That's a real business model, not some crazy Ponzi scheme like half of crypto. Even BlackRock's Bitcoin ETF has recorded higher revenues than its S&P 500 counterpart. Let that sink in for a second. That's how popular crypto is right now. Our second reason, of course, is a sign of a maturing market. Unlike under the Biden regime with Operation Choke Point 2.0, where they're literally trying to kill the crypto industry, we've had a complete about-face. Crypto now has more regulatory clarity than ever before. The U.S. now has the Genius Act, which enables banks and financial institutions to issue fiat or collateral-backed stablecoins, laying the groundwork for insane, exponentially explosive mainstream adoption, regulated stablecoin issuance from your bank. It's crazy, man. The SEC approved Bitcoin ETFs, and they now hold roughly 6.1% of the supply, worth $150 billion. In the EU, the MiCA law, fully enforced since December 2024, is now mandating licensing for service providers, stablecoin reserve requirements, and different investor transparency laws and protection, as well as AML KYC rules. Some of that stuff's positive, some of that stuff's bullshit, but it is what it is. We're getting regulatory clarity. By Q1 2025, 65% of EU crypto businesses were MiCA compliant, while EU institutional crypto holdings rose 32% in the same period. Institutions like Clarity, surprise, and they have big money. They're going to pump our bags. The number of registered virtual asset service providers jumped 47% during that same period. By the way, in the UK, the FCA will allow retail investment in crypto exchange-traded notes via the London Stock Exchange starting October 8th, 2025. The overlords give you permission again to buy crypto. For the third one, let's look closer at the Genius Act, which was signed back in July. Most people fail to realize how incredibly big this is and how it will change crypto forever. It just made stablecoins legit. But it goes beyond that. Did you notice that Ethereum and Tron rallied after it was signed? Because stablecoins need one thing that these layer ones have: smart contracts. That's the real kicker. Stablecoins can't exist without smart contracts. Ethereum, Solana, Tron, a few others are going to benefit from that. Every time a dollar-backed token is issued, redeemed, or moved, it's executed on-chain. Requires a little bit of gas to do that. And where does the majority of the activity live today? Ethereum, Tron, and Solana. I know what you're thinking. Tron. Justin's son, man. Don't fade Justin. Anyway, the stablecoin total market cap is around $280 billion right now. Of that, about half, or $143 billion, is on Ethereum. Tron's got about $82 billion, and Solana's way off in third place, but still impactful. So smart contract chains will have an invaluable use case. Now, before we get on to the fourth reason, quick shout out to today's sponsor. Look at that beautiful wallet right there. It's the TANGEM wallet. It's not just another wallet. It's a one-stop, all-in-one vault for your crypto. A sleek card, okay? No BS, no wires, no charging. All you do is tap it on your phone like that. you're good to go, baby. Stay secure, stay private, no hacks, no seed phrase leaks. Of course, you can get your seed phrase if you want it. You're in full control of your assets. Has support for over 80 different networks, DeFi tools built in. It's everything you need. Super simple, super convenient, and they're cheap. And guess what? They even get cheaper because you can get 10% off of your TANGEM wallet right now using the link down below. Go check it out. Thank you very much to the guys over at TANGEM for sponsoring this video. Thank you for supporting our sponsors and for keeping your coins safe with a gosh darn cold wallet solution. It's simple, it's cheap, it's awesome. Go check it out. Link down below. Okay, the fourth reason. The U.S. economy is cooking, baby. Thanks to AI advancements and new regulatory policies, things are cooking in America. Yeah, there's talks of an everything bubble, and an AI bubble, and a bubble, but the US numbers are hard to argue with. Unemployment is just 4.2%, near historic lows. Not record lows, but near enough, okay? According to advanced estimates, the US GDP grew at a solid 3% annual rate in Q2 2025. Better than market expectations. Consumer spending, 1.4% annualized, pretty decent, but these are lagging indicators like checking yesterday's scores. So let's peek at some leading indicators for what's next. The ISM services, PMI, quizzes, service industry folks, and stuff like business activities. We want it to be above 50 for growth. July's number, 50.1. Scraping by with a C, but it's technically expansion, so we'll take it. The S&P Global Manufacturing PMI for August, a hot 53.3, smashing expectations of 49.5, called an A- for the factory vibe. That's the strongest since May 2022, by the way. America's economy keeps on growing. As Warren Buffett said, don't bet against America, baby. The fifth one is the BTC gold ratio. Now, gold has been the benchmark store of value for millennia. We like the shiny gold around here, okay? Shiny gold metal is pretty cool. Anyway, but instead of measuring Bitcoin against the dollar, which is always losing value, analysts now track Bitcoin versus gold. Well, we've been talking about it for years here, but interesting to remind ourselves of it. The ratio shows how many ounces of gold one Bitcoin can buy. In 2013, it was just over an ounce. In 2017, about 15.5. In 2021, nearly 38. Every cycle, Bitcoin goes into price discovery mode once the previous high is broken. Maybe we get up to 80 ounces per Bitcoin or something like that this cycle. Today, we're testing previous highs with rate cuts looming. That resistance will probably break, and we will get to price discovery mode once again versus gold. The sixth reason is all about upgrades, baby, because guess what? Crypto's fundamentally, literally never been better. Blockchains are getting all kinds of serious tech boosts beyond just the buyers, new buyers showing up. For example, Solana's Fire Dancer upgrade aims to push through 1 million transactions per second, while further reducing costs. Ethereum's Fusaka upgrade, slated for November, optimized validator operations and efficiency. We probably won't notice these upgrades day to day. Solana and Ethereum are already fast and cheap enough, but here's the kicker. Thanks to the Genius Act, stablecoin activity is set to surge. That means more on-chain transactions. That means more demand for smart contracts and a massive tailwind for really chains right across the board that can handle the traffic. And we have big upgrades on Say and AVAX and all kinds of stuff. That's just the two big ones, but there's a lot of crypto fundamentals that are looking better and better. The chains are getting better and better. Reason number 7 on the list is the rise of institutional built layer 1s and layer 2s. It's not just the big players are buying into crypto anymore. They're actually building the next generation of blockchains themselves. Fintech powerhouse Stripe is quietly working on a high-performance chain called Tempo. Circle has unveiled Arc, a stablecoin-focused network. Surprise, surprise. Google came out with one. The guys behind Tether are launching one. It's going to keep happening, okay? More and more big money is getting on chain. Now, some purists might see this all as a disgusting affront to decentralization. But here's the bigger picture. Serious capital and world-class talent are now pouring into the blockchain infrastructure world, which could stretch the cycle well beyond 2025. This is stuff we've been talking about happening for years, and the institutions are finally here, and they're finally doing something. And everyone wants to call the topper for 5 seconds. The next one on the list about crypto lending is just getting warmed up. Dan Tapiero, CEO and CEO of 10T Holdings and One Roundtable Partners, says the market still has massive room to grow. Why? Because lending is still in its infancy. Bitcoin and Ethereum are now legitimate collateral. That's something really important to understand. And U.S. adoption plus regulatory clarity are driving institutional interest. In other words, the old world of finance is salivating at the opportunity in crypto right now. Compared to 2021, crypto lending could easily multiply several times over the previous peak, making this one of the most exciting growth areas right now in the ecosystem. And that's going to bring a lot of liquidity and money into the system to pump all your dog coins higher. The final point, of course, is sovereign adoption. This is just a cherry-picked list of 9 different things. We have like 50 things we can make, but I'd be here for an hour. And you and I ain't got that time. Sovereign adoption. Institutional players diving into into crypto is one thing and it's big and obviously they bring a lot of money. But what happens when entire countries who can literally print money start buying? Sovereign states are already stacking. After selling some of its stash, Bhutan still has around 11,000 Bitcoin valued at $1.24 billion, about 40% of its GDP. Clearly punching above its weight. Of course, El Salvador, very famous. Now we have the Philippines, lawmakers proposing a bill to direct the central bank to buy 10,000 BTC over the next 5 years to create a strategic Bitcoin reserve for the country, with that reserve then locked for 20 years and funds used solely to pay down the national debt. Genius. Other nations like the Czech Republic and Brazil are having conversations. In fact, in Brazil, it's moved to committee meetings now discussing what the Bitcoin reserve could look like. Don't forget, America passed the Bitcoin strategic reserve bill, and even though they said they're not going to use any new money to buy it, there's a lot of other ways they can use to get Bitcoin, like selling the strategic cheese reserve. We now have Japan also actively discussing a Bitcoin reserve. It's coming. Guys, this is like defeating the final boss in a video game. We're in the big leagues now. Now, don't get me wrong, this cycle will eventually end when we run out of buyers at some point, right? But when you zoom out and look at the macro picture, it makes sense that we could be in for an extended run and things are going to get way stupider than you think. We have zero euphoria on the timeline right now, and I can't predict the future. I don't have a crystal ball. But I've said it before, and I'll say it again. We'll likely see a local top by the end of this year, final peak sometime in 2026, and the potential that we even go higher for longer than that. But that's for later us to worry about. Let's focus on the next few months, try to get through that, and then we'll think about 2026. Thanks for watching. You're awesome. I'll see you in the next one.